Good day, everybody. Chris Herline here of Reap Financial, coming to you with today's Wealth Report. It is Friday, January 10th, and as we head into the new year here, I think it's really important to just take time to reflect on everything that transpired in 2024 and hopefully use some of these experiences, some of these concerns, some of the exciting things that transpired to give us a true and clear perspective as we head into 2025. So let me start with some key events that took place as I get your wheels turning around what we just went through in 2024. And even more importantly, I want to review this past year because it can remind us not to overreact to current events. Too often, investors and markets have strong reactions to events because investors believe that these events will have long-term significance. And then what that can turn into is these market moves are actually overreactions. And when we see these overreactions, all or most of the initial market moves are reversed. A good example is the market reaction to the recent U.S. elections. What's really remarkable is how little the markets reacted to developments in the U.S. election as they unfolded. And there's a lot to be discussed there. We had a sitting president who had secured renomination that was forced out of the contest by other party leaders because of a noticeable decline in his cognitive abilities. Yet, he's remained in the presidency. During 2024, the candidate who ultimately won, Trump here, was convicted of multiple felonies, lost a civil suit, and had other criminal and civil cases pending. Oh, and by the way, he also survived 2 assassination attempts. All that to say, stock and bond markets didn't react much to those events. Outside of those things, global conflicts also were significant in 2024, that they also had little effect on the global economy and the markets. The Russia-Ukraine war continued and expanded. Ukraine invaded and took control of part of Russia. It also launched missiles and other military actions deep into Russia. Russia expanded its position in Ukraine and occasionally made threats to use nuclear weapons. We have the war between Israel and Hamas that also expanded. Israel took strong actions against Hezbollah, Iran, and others while continuing its efforts against Hamas. The Syrian government was ousted by rebels. Israel and Turkey each took the opportunity to occupy parts of Syria. Governments of several developed nations also were in turmoil. Leaders or ruling parties were ousted or in trouble in France, Germany, Japan, South Korea, and other countries. The political situation in most of those countries was uncertain as the year ended. If you could rewind to the top of 2024, top of last year, if I were to tell you a year ago that any of those global events would happen in 2024, I suspect that many people would have predicted a worldwide recession and potentially a bear market. Yet, in the face of all those events, a major trend in 2024 was continued global economic growth and strong investment markets, especially here in the U.S. Here in the United States, major stock indexes continued to set record highs throughout the year. Plus, 2024 is one of the very few years in which the S&P 500 traded above its 200-day moving average for the entire year. That's pretty impressive. Most markets outside the United States didn't do so well, but they generally had positive returns. Gold also had a strong year, setting a number of record highs before a decline late in the year. I think a good guess would be to say that gold might have been the beneficiary of the global conflicts. Central banks around the world, especially in Asia, increased their gold holdings as they sought to make their reserves less dependent on the US dollar. Several times last year, I spoke about Bitcoin. Bitcoin was another big winner in the markets, especially in the last half of the year. Bitcoin was aided by the SEC approval of ETFs that buy Bitcoin at spot prices and hold it. The SEC had initially declined to approve the ETFs, but was forced to approve them after it lost a series of court cases. So that approval actually came in January of last year. I think it's safe to say as well that the election results also propelled the price of Bitcoin because of widespread belief that government policies would be more favorable towards digital assets. Then we have the growth of artificial intelligence, AI. That has been a major support of stock markets since OpenAI released its ChatGPT app a little bit more than 2 years ago now. Are you using it? I think many of you are. A lot of companies have poured money into AI-related investments, whether they are developers or likely users of the technology. The rapid improvements in AI during the year exceeded most expectations. All throughout the year, investors remained optimistic about technology in general, despite major software problems in the summer and despite big swings we saw in many of the tech stocks. You may or may not remember, in July 2024, there was a faulty update to a security package from CrowdStrike that's included in Microsoft's Windows software update, and that caused many systems to fail. We saw a number of airlines and banks had to either shut down or use manual systems until the error was fixed. Because of this huge disruption, the major stock market indexes tumbled in mid-July, but headed upward again beginning in early August. I also believe that the Federal Reserve also was a major support for most investments. Many people can forecast things, but investors mistakenly believed for most of 2022, 2023, and 2024 that the Fed would reduce interest rates rapidly and ease monetary policy. But this inflation that began during the pandemic, it's lingered. Even though many analysts believe that the inflation was transitory and due to short-term supply problems. The Fed finally reduced rates in September 2024 after becoming concerned about some weak economic data, especially in the labor market. So the actions it took because of that increased growth and improved stock market returns. But the Fed's actions had the opposite effect on longer-term bonds. They had been rallying most of the year, but they became one of the year's major investment losers after the Fed rate cuts. Even as of now, bond markets remain concerned about inflation because the Fed reduced rates before inflation hit its 2% target. And inflation, I don't have to tell you, it still remains sticky. Hard to believe, but the long-term Treasury bond ETF, TLT, it lost more than 7% in 2024 and close to 10% in the last 3 months of the year. So while stocks and Bitcoin and gold and several other investments set record highs, safe investments, they also did well. Assets in money market funds reached record levels. It's hard to think just a few years ago you were getting 0% on a money market. Today you're getting maybe 4 to 5%. Through mid-December of 24, assets in money market funds increased by $800 billion, which brought their rise since the end of 2022 to almost $2 trillion. That's trillion with a T. That's a big number. As of the date of this recording, total assets in money market funds are approaching $7 trillion. The previous high was just below $4 trillion early in the financial crisis. I just read a recent article in the Wall Street Journal that wrote the surge in money market funds probably isn't a sign of cash on the sidelines waiting for an opportunity to invest in stocks. Instead, they're saying that cash allocations by investors are at their lowest levels since 2001. The surge in money market fund assets apparently is due to investors moving cash from low-yielding bank accounts to higher-yielding money market funds. We've talked to you about that opportunity at Fidelity all throughout last year, and that, money doesn't have to sit dead any longer. You can get yield on your cash. So all this to say, in 2024, we should have learned the futility of investing based on predictions. If we had known ahead of time many of the things that would have happened during the year, most of us would have repositioned our portfolios, wouldn't we have? In ways that would have turned out to be detrimental to our returns. The year also taught us, again, not to adjust our portfolios and retirement plans based on the latest news and rumors. Market reactions to current events are often transitory. At REAP Financial, we invest our families. We position you to have balance and diversification so that you don't have to depend on a particular economic or investment environment. We help you arrange your retirement finances with a long-term perspective. We've also introduced to many of you new ways to have a margin of safety and flexibility in your portfolio. So yes, as we enter into 2025, there are some issues and questions on my mind, and I expect that the answers will influence the economy and the markets. Things like, will economic growth in China bounce back? Or will slower growth for the country continue to be a drag on global growth? With a new administration heading into the White House, how extensive will the tariff and trade wars be? Will these negotiations ultimately benefit the U.S. economy or lead to slower growth and higher inflation? Or will growth and productivity and immigration continue to be higher than expected, increasing economic growth while holding down inflation? And a final question, one that we're fielding a lot right now, is will U.S. stocks continue to outperform the rest of the world and justify its current valuations? When we think about what the Magnificent Seven stocks have done for the market, question is will the bull market spread beyond large technology growth companies? This new year is poised to bring great opportunity. I want you to know that as your advisors, we will stay vigilant and we're going to do our best to stay in front of current events, and we will bring you up to speed as current events unfold. In the months ahead, we're going to be heading into tax season. Much of my communication through our bi-weekly wealth reports will be around opportunities, some changes in the tax landscape, and more. So be sure and tune in with me, and we wish all the best to you and your family heading into 2025.